Hello, everyone. Thank you so much for joining us for another weekly wrap-up. My name is Jeremy Kronemeyer, Operations Manager for Wickham Financial Group, and I have Graham Wickham here, President and CEO of Wickham Financial and Insurance Services. Graham, how'd the week look last week?
Yeah, thank you, Jeremy. Thanks for our listeners jumping on the call. Let's jump in. We saw U.S. equities rise for the third straight week. So we saw the S&P index jump nearly about 2%. The Nasdaq and the Russell 2000, that's a small cap index, up about 1%. So we saw all of the 11 S&P sectors finish in the positive territory, led by utilities, up about 4.3%. Financials jumped about 3.2%. And we did see a lift or a bounce over in crude oil. Gold futures also rose a bit, up about 2.6%. So we did see the U.S. Treasury yields ease a bit on Thursday when we had weekly jobless claims come out, and they leaped up. We saw an 8-month high of about 231,000. So the anticipation or evidence of maybe seeing some cooling in the labor market, hopefully that will translate into the Fed's comfort level with lowering interest rates, if that's what you want to see. So on a one-year inflation expectations, we did see that expectation jump a good bit with some consumers out there. We did see the consumer expectation reflect no real relief with interest rates affecting housing costs, the borrowing cost of housing, so on and so forth. We did also see the U.S. consumer credit increase, the smallest amount this year, as credit card spending fell a little bit. Now, the FMOC, the Federal Open Market Committee members, were largely in line with the guidance that rates will likely remain steady until they get a clear picture of the path of inflation moving down. Now, has it moved down? Absolutely. But they want to continue to get past this sticky part and get it down a bit more. So let's jump overseas. So we saw the Bank of England keep rates unchanged, but a cut could come soon as maybe June. That might be the same thing for the European Central Bank in their meeting. I think they were also thinking about June as well. We did see some economic expectations for Germany become positive, and that's good news. Germany's really struggled with getting growth up a good bit over there. If we look over at the Bank of Australia, they kept rates relatively unchanged and steady at this particular point. So let's look at this week that we're in and moving through. We are going to see a lot of inflation numbers coming out. We did see some signs of gradual cooling in the economy. So the Fed's going to be looking for that. They're going to be looking at the PMI numbers, the CPI numbers. The PPI numbers will be coming out before the CPI. So that's going to give the Fed some clues on the direction of rates and the next steps they need to take. But we are expecting some other economic numbers coming out, some U.S. releases for retail sales, Empire State, Federal Fed Manufacturing Survey, industrial production, housing numbers. And that's kind of interesting because it's tying right into some really big retailers that are coming out this week. Home Depot, Walmart, big retail earnings this week. So it should be very interesting to see those numbers. Jeremy?
Gotcha. Well, we always appreciate the information, Graham. And to our listeners, we do have our 5th annual car show coming up here at our office on June 8th, here on Saturday, here at the office from 10 to 1. So if you or someone you know has a car, a truck, a bike, a trike, something cool like that, we'd love to have you. So just check out our website under the events page or our social media and give us a call here at the office, and we'd be glad to have you. And again, we always appreciate it. And thanks for joining us. Talk to you next time.
Take care.